Pirojsha Godrej, Chairman of Godrej Housing Finance, as well as Manish Shah of Godrej Housing Finance, now join in on the show to discuss their new business launch, their expansion roadmap, as well as their business plans. Thank you so much, gentlemen, for taking time out. I'm going to begin with you first, Pirojsha. It's a new business, a new segment that you're planning to enter. Tell us a little bit more about this new launch, how you came up with the plan, and what the structure is going to be now for this new venture.
Great to be with you. I think we're very excited to be launching Godrej Capital, which is intended to be the financial services arm of the Godrej Group. Godrej Industries is the parent company of Godrej Capital, and under Godrej Capital we have two operating businesses. Godrej Housing Finance, which as the name suggests is a home loan business, and Godrej Finance, which has an NBFC license and will be doing lending of other types. And we think it's an exciting opportunity for the group. We've on the housing finance side been in the market now for about 18 months and are very happy with the kind of response we've seen from our customers. So the focus now is to really double down on that investment into financial services and do our best to create a leading retail financial services business over the coming years.
Right, Manish, your plans to gear up with a balance sheet of about 30,000 crores by 2026 are in place. How do you plan to build a super financing experience for consumers amidst the solid competition as well that exists in the industry?
Right. So I think the way we have set about going about this goal is to build our business line by line as we started. As Pirojsha mentioned, we started off with the housing finance space. Over the next 4 years, we're expanding our housing finance business on the one hand. We have launched our loan against property business, which we will grow. These businesses, we will now double our footprint this year from 5 locations to 11 locations. In the coming years, we'd like to then grow geographically. While we're doing this, in parallel, we'd also like to look at expanding our housing portfolio to affordable housing, and then start looking at opportunities later this year, early next year, in the unsecured business loan space. So both from a geographic growth, from a product portfolio growth, this is what we have planned as we go from our current, from where we are today towards our 30,000 crore goal in the next 3 to 4 years.
Right. Pirojsha also wanted to understand, Godrej Capital currently has its footprint across Mumbai, Bangalore, Delhi, NCR, Ahmedabad, as well as Pune. But tell us about your expansion plans. Which regions will you next focus on?
Well, the immediate goal will be to take the 5 cities we're currently in and move that to 11 cities over the current year. We've identified those cities. In terms of longer-term geographic expansion, we want to do it in a quite deliberate way. Rather than simultaneously entering all the markets, we're focusing first on the biggest cities and working our way down. We think this will allow us to create strong individual presence in the markets we're in, become relevant and capable in those markets, and then take that to the rest of the country. Certainly, over a period of time, we expect this to be a truly national business with a presence in all parts of India.
Right. Manish, there's been an extension on the low-risk weightage on housing loans as well by 1 year from 31st March to now 31st March 2023 from the current year, that is. How is it that you see housing finance market perform currently?
So I think very welcome. Much needed. The portfolios behave not just for us, but across the board. Housing has been a portfolio that stood the test of time. In fact, if you look at portfolios for the larger players, despite the 2 waves of COVID, impacts on the NPAs have been negligible and quite welcome. It's especially as rates have gotten so competitive. It's something that the industry needs for us to sustain, the current rate of growth and actually accelerate it as we move towards our housing for all goal.
Good afternoon, gentlemen. Pirojsha, before we let you go, tell us about what outlook do you see for the real estate sector as well as the housing finance sector going forward. Do you think the strong demand that we are seeing is going to continue in FY23 as well?
I think it's actually a very exciting time for the property sector. We've between 2012 and 2020, you saw the real estate sector in India go through a pretty long and difficult decline. Over that period, depending on the estimates, you've seen property sales actually decrease by more than 40%. Over these last 2 years, as partially a result of the pandemic and the kind of increase in demand for real estate that has resulted, we're now seeing the next leg of the property cycle. And usually the real estate sector is one that has these somewhat long-term cycles. So it takes 7 or 10 years for things to correct themselves when they've gotten bad, as they had over the last few years. But also the upswing typically lasts that long as well. So I think we're in for an exciting period. Godrej Properties has its best ever year for sales in the year that's just completed. Most of our large competitors have similarly reported record numbers. So, and I think that trend is actually still at its very early stages. So we're starting to see now not just demand volumes pick up, but also pricing of properties. We've seen, for example, Godrej Properties has across the board taken price increases in April. We've seen year on year about a 10% increase in prices for property. And that is also needed given what you referenced on commodity prices and the kind of input cost pressures that are facing the sector, which are quite severe at the moment. But overall, I think this is going to be an excellent few years for the property market, and consequently a great opportunity for housing finance players as well, where scale in the industry, I think, is set to double quite quickly over the next few years.
Okay, on that optimistic note, gentlemen, we'll let you go. Thank you so much for joining us with that perspective regarding the industry, and all the best for your new venture.